When you sit down with an artificial intelligence tool to research your investments, are you simply using a lightning-fast search engine, beat, or is that AI actually functioning as your personal, dedicated financial analyst?
That is the crucial distinction, yeah.
Yeah.
And welcome to the deep dive. The difference, as our sources are showing, really comes down to the quality of your command of your prompt. Most investors, they still rely on simple, kind of one-line questions. But today, we're giving you a shortcut, really, to maximizing rigor.
Right. We're looking at sources that treat the prompt, the instruction you give the AI, like a complete blueprint, almost like a multi-part structure designed to generate an organized, deep research report, not just, a list of facts.
Exactly. Our mission today is to give you that blueprint. We're unpacking 7 detailed examples. We're showing you how to move from basic data check, stuff like that, to complex stock screening and even qualitative analysis. You're going to learn how to transform an AI, something like Perplexity, into a disciplined, systematic research partner. Let's dive right into the core analysis.
Okay, let's unpack this first scenario then. We really need to move far past just asking if a stock went up or down. To gain a true edge, you've got to understand the why behind that move and, crucially, what the wider market thinks now.
Right. So our case study focuses on NVDA, after a massive price jump. A structured analysis here kicks off with a 4-part prompt, and the first output it gives you is a performance comparison.
And that performance gap is, well, it's staggering, isn't it? Our sources note that in one recent week, NVDA stock delivered an astonishing gain, 21.5%.
21.5%. Now, hold that number against the sector benchmark. The VanEck Semiconductor ETF, that's SMH, tracks the whole industry. It only managed an 8.2% climb in the same period.
Duh.
So that massive outperformance, it confirms the catalyst was company-specific. It wasn't just a rising tide lifting all boats,
Right, it singles out NVIDIA. Which brings us directly to the primary catalyst. What was the specific needle-moving news here?
It was the GTC 2025 conference, and
Yeah.
specifically the introduction of the new Blackwell Ultra GPU for data centers.
Mhm.
And get this wasn't just some small incremental update. Public tests highlighted that Blackwell Ultra was 30% faster for key AI training tasks than the older model.
30%. That's a huge leap.
Yeah, that kind of performance jump immediately shifts the calculus for analysts. You can see it happen.
And the analyst reaction was swift and quantifiable, too. HSBC upgraded NVDA from hold to buy. Goldman Sachs significantly raised its price target, moving it from $150 up to $180. I mean, the market perception just changed overnight.
And the change in valuation is maybe the most important output here. Before this rally, the stock's forward PE ratio was sitting around 35 times earnings.
Okay, 35x. And after that 21.5% jump, that forward PE shot up to 42.5 times. That is a substantial increase.
It really is. The market isn't just saying NVDA is worth X amount today. By accepting that much higher ratio, 42.5, they are explicitly pricing in huge, almost guaranteed future growth, which means they're willing to pay a massive risk premium for those projected earnings down the line.
Okay, let's just unpack that premium for a second. How does that PE jump, going from 35x to 42.5x, how does that actually quantify investor belief in NVDA's future growth?
Well, the increase confirms investors expect significantly higher future earnings. It moves beyond just optimism into actual financial commitment.
Right, that shift from just analysis to actual commitment. That's key.
Absolutely. Now, moving on. This is where you stop being like a manual data clerk and really start acting as a portfolio manager. The next 2 prompts focus entirely on automation and scaling your analysis using structured reports.
Okay, so prompt 2 is designed for a daily portfolio briefing. You basically stop manually checking individual events every single morning, and you let the AI compile the heavy lifting for you.
Exactly. This structured report delivers 4 key components. First up, technical analysis. So it's tracking price change, volume compared to the 20-day average, and those essential support or resistance levels.
Then you get fundamental news. And this includes any urgent SEC filings, like a Form 8K. For those maybe unfamiliar, that signals a major corporate change or some crucial event that needs immediate attention. It's important stuff.
Definitely. The report also captures analyst updates and critical macroeconomic context. Our sources showed an example where the August CPI data, the inflation number, came in at 0.4%. That was higher than expected. Now, that kind of macro news needs to be filtered down to specific stock impact. You need to see how it connects.
And the report does that. It delivers those targeted results. For instance, TSLA faced selling pressure, dropping 2.1%, breaking below its key $250 support level, potentially due to production warmers, maybe linked to the economic outlook. Meanwhile, Microsoft MSFT, it rose 1.5% on trading volume that was 30% higher than its average.
The AI connects the dots, between the CPI number and the specific stock reactions almost instantly.
And that speed and organization it leads directly into prompt 3, the complex technical screening. This is where you transform an entire multi-layered trading strategy into just one single command for the AI. Okay, so you define the specific bullish criteria for the AI. You're basically asking it to search the entire S&P 500 and find only the stocks that meet all three specific conditions at the same time.
And the required conditions are pretty rigorous. First, it's got to be exiting oversold territory. That means the 14-day Relative Strength Index, or RSI, that measures price momentum has recently moved above the 30 level. Second, you need a bullish MECD crossover. That indicates a potential shift in longer-term momentum is underway.
Okay. And the third hurdle is volume confirmation. You need that daily trading volume to be at least 50% higher than the 20-day average. That proves the move has real conviction behind it.
Yeah, just listing those three complex criteria simultaneously makes my head spin thinking about checking even 20 stocks manually for all that.
Honestly, yeah.
Yeah.
Trying to check the RSI and the MECD crossover and the volume confirmation across a full watch list, that's usually where I just kind of give up and maybe resort to a hunch. This prompt solves that exact pain point. It's a vulnerability I definitely admit to having myself sometimes.
Right, we've all been there. And the resulting report from the AI, it found 3 opportunities that met all those criteria: Adobe, Qualcomm, and Caterpillar. And the data confirmation was right there. QCM, for example, it showed a plus 72% volume change, validating that signal.
Okay, so drilling down on that, what is the main benefit of screening using 3 complex criteria simultaneously like this?
It efficiently finds opportunities that exactly match a specific, multi-layered trading strategy, and importantly, it eliminates human error or oversight.
Efficiency and accuracy. Makes sense. A mid-roll sponsor read placeholder. Welcome back. So far, we've covered hard data, automated reports. But where the real alpha, the edge, is often found, it's not just in the numbers. It's often in the qualitative analysis reading between the lines of management communication.
Exactly. Prompt 4 focuses on going inside an earnings call. This process extracts management sentiment, identifies recurring themes from the Q&A session, which often reveal way more about future strategy than just the basic financials do.
Let's use the Microsoft MSFT earnings call case study here. Part 1 analyzes the key performance indicators, the KPIs. The AI extracted that Azure cloud revenue grew by 42%. Pretty strong number.
Yeah, but the fascinating part is the acceleration. Azure growth was actually slightly higher than the 40% reported in the previous quarter. Now, why is that tiny 2% difference such a strong signal? It suggests operational momentum is actually building, not slowing down.
Interesting nuance. Okay, then the Q&A themes section. This is where the structure prompt really shines, I think. The AI identified the top 3 concerns that analysts kept hammering away at during the call. Number 1, how Microsoft plans on actually monetizing its Copilot AI services. Number 2, maintaining its cloud advantage over rivals like AWS and Google. And number 3, the looming threat of increasing global regulation. Those were the hot topics.
And then there's the sentiment analysis. This
Yeah.
is something that's incredibly hard for a human to track consistently across, hours of audio. The AI detected a consistently confident and assertive tone from the management team throughout the entire call.
Okay, and here's where it gets really interesting, I thought. When addressing the competitive landscape, the CEO made a highly specific strategic point. He emphasized offering a complete system from the computer chips all the way to the final apps. That's a direct quote pulled by the AI. And this was framed as their unique advantage over companies that only offer single sort of point solutions.
Yeah, that quote, that single quote, is the kind of detail that informs your investment thesis way better than just looking at a balance sheet sometimes. It's really a statement about market domination strategy, not just market share numbers.
So digging into that sentiment piece again, what did the sentiment analysis reveal about Microsoft's competition strategy specifically?
Management confidently focused on promoting their whole end-to-end system, their ecosystem, rather than just competing on specs for single products. Okay, moving into our final segment now. We're looking at using AI as more of a strategic radar system. This involves tracking the entire competitive landscape and then filtering the market based on advanced, sometimes complex, investment philosophies.
Right, so prompt 5 is your weekly industry intelligence report. You're effectively using AI as a sophisticated radar system. It tracks the entire sector, not just the stocks you happen to own or follow closely.
Exactly. The first part tracks the competitive landscape. For example, the sources noted a key strategic partnership between AMD and Oracle Cloud to deploy AMD's new MI400X accelerators. Now, that is a direct, measurable challenge to NVIDIA's dominance in the data center space. You need to know that.
Part 2 handles emerging trends. This is where the AI spotted the sovereign AI trend. That's countries like France and India starting to build their own national large language models. This creates an entirely new global market for infrastructure and chip companies.
That's a big one. And part 3 tracks venture capital flow. Where's the smart money going? We see an example like a startup called Cerebral Dynamics, focusing on AI drug discovery, raising a staggering $120 million. This immediately flags where sophisticated investors are deploying capital right now.
That sovereign AI trend? Wow. I mean, I would have completely missed that just scrolling through normal headlines. Whoa. Imagine automatically tracking every single global trend like that without reading hundreds of news sources every single week. That's like having a bespoke spy satellite just for market movers. Incredible.
Right. That kind of comprehensive radar shifts the conversation from just reacting to data passively to actively forming strategy.
Yeah.
So we've covered 5 types of reports now. Let's jump to our final technique. This is Prompt 7, which transforms an entire investment philosophy into, basically, machine code.
Okay, prompt 7 is the JARP screening, growth at a reasonable price. Now, this is a highly nuanced philosophy, right? It blends 2 separate concepts, quality and value, into one precise interlocking set of machine-searchable criteria.
And the criteria are demanding. They're layered.
Yeah.
You require scale, first off market cap over $100 billion, then consistent growth over 15% revenue growth for 3 consecutive years, plus high quality needing over 60% gross margin and over 20% return on equity. Pretty tough gates.
And critically, the requirement for a reasonable price. Specifically, the forward PE ratio must be below its own 5-year historical average. That's complex screening. It forces the AI to consider relative historical valuation, not just the current price level.
Okay, but wait a sec. Isn't defining reasonable price simply by its historical average maybe
Right.
a bit too simplistic for a machine? Doesn't the broader economic context, like interest rates, matter there?
That's a fair point. It does matter in the real world, absolutely. But the beauty of these structured rules is that the prompt isn't trying to capture all possible context. That would be impossible. It's trying to capture one specific actionable trading inefficiency, finding stocks that are high quality and still growing, but seem to be temporarily mispriced compared to their own established historical norm. It's a very focused task.
I see. So it's finding a specific anomaly based on its own history. And the results from the source material showed that Microsoft, MSFT, and Adobe, ADBE, met all these strict requirements at that time. Notably, Microsoft's PE was 5% below its 5-year average, and Adobe's was actually 10% below. So it efficiently finds these high-quality opportunities only when they're temporarily, potentially undervalued relative to themselves.
So thinking about that JARP prompt, what would you say is its main accomplishment? What does it really achieve?
It efficiently finds high-quality stocks only when they appear temporarily mispriced relative to their own established historical valuation range.
That really is the core lesson we wanted to share today, isn't it? The quality of the AI output you get is directly proportional to the quality, the structure, the detail of your input. These detailed multi-part prompts, they really act as a necessary blueprint.
Yeah, they save you countless hours of routine research. Absolutely, yes. But far more importantly, I think, they significantly improve the rigor and the quality of your analysis by forcing the AI to synthesize multiple complex data points simultaneously, something that's really hard for us humans to do consistently.
Now, just a quick but very necessary word of caution here. The information we discussed today, including the specific stocks and metrics like NVDA or MSFT, it's purely for educational purposes only. This is not investment advice. Please always perform your own due diligence and speak to a qualified professional before making any financial decisions.
Indeed. Very important disclaimer. We focus heavily today on using these structured prompts for analysis, reacting to and dissecting the data as it arrives.
But what if we sort of reverse the process? How can these automated systems become fully proactive? Could they be constantly generating new, customized investment philosophies, maybe new complex criteria for us to simply test and explore? Beat. That could fundamentally change how we even discover opportunities in the first place.
That thought alone should really inspire you listening. Start by building your first detailed prompt blueprint today. Use these examples and just see how much faster and frankly smarter your research becomes even this week.
Until the next deep dive.